Hi, for libertyandeconomics.com, I'm Nick Sorrentino. Um, Back in another life, I was a financial advisor, um, stockbroker, you know, did all that stuff, stocks, bonds, even the odd annuity here and there. Um, and I'll tell you, one of the things I learned is as I have become increasingly of the free market and sound money mindset is that um, if you have a portfolio of investments, you would be absolutely nuts not to have a significant portion of your assets in gold, silver, perhaps platinum, palladium, and other commodities. Now, most retail investors, frankly, have avoided dealing with these sorts of assets, traditionally because they, had to go through a commodities broker, and usually their stockbroker didn't was likely was not licensed to sell commodities, do futures and all that sort of stuff. But times have changed. You can buy exchange traded funds that follow commodity indexes. For instance, you can buy GLD, which is the gold, one of the gold exchange traded funds, and essentially follows the price of gold. So if you want to play gold, that's a good way to play it. SLV is the same thing for silver. They're just a number of them, and frankly, um, all right, you'd be crazy not to have a position in commodities as a hedge against potential inflation coming down the line, which as the central banks of the world print more and more fiat currency, it just, I mean, I mean, maybe I'm wrong, and inflation won't ever be an issue again. But my sense is it's there, and China is flashing signals at us, telling us that inflation may indeed be an issue. I will say I still think we're in the midst of a, you know, probably a depression. So we could have a nice little mix here of inflation and depression. So watch out for that. That's something to look forward to. But anyway, remember it. A proper portfolio, in my opinion, and it's only my opinion. And don't go to your advisor on this. Do your own research and talk to your licensed professionals and all that. Um, a proper portfolio has stocks, bonds, mutual funds, the whole deal, but has to have commodities. And I really think some exposure to precious metals, um, especially since precious metals essentially are inverse to the value of the dollar. So, if, for instance, the value of your assets, um, really plummeted in dollar terms. So let's say that inflation really were to run rampant. Okay, and the value essentially of the assets that you hold. Say you have $100,000 invested in paper assets. And that dollar continues to weaken. Um, what is likely to happen is that your gold, silver denominated assets, or denominated, but gold or silver that you own, essentially will move in an inverse way to your paper assets. That's the theory. Um, Sometimes it works, sometimes it doesn't. But gold and silver are excellent hedges that the average person can learn about and employ to preserve their wealth. And you don't have to go out and put all your money into it, um, but a significant portion. So in the event of a catastrophic situation, um, your money is and your wealth is preserved at least somewhat, and maybe even counteracted completely. So anyway, long one today. Till next time.